We are now ready for the session on financing, financial perspective. And let's see, could I get a copy of the agenda? Thank you. Okay. Let me introduce the panelists, and this is going to be in alphabetic order. So that's how we do things. I'll introduce and invite the person to the dais. Mr. Kumar Bibhu is Vice President, SBI Capital Markets. Has been with SBI now for almost a decade and a half. Earlier worked with NTPC for a few years and has a postgraduate degree in science and also has an MBA. Mr. Bibhu, please join me in welcoming Mr. Bibhu. Also with us is Ms. Aakanksha Joshi. She is partner with the ELP, Economics Law Practice, has been involved with infrastructure on different aspects, supply agreements, PPAs, construction contracts, concession agreements, bid documents, et cetera, et cetera. She's been involved with a number of transactions, and including sale of Testimony at Enterprises to Carlyle, among others. This is considered Carlyle's first major buyout in India. She has been recognized as, which was recognized apparently as Private Equity and Venture Capital Deal of the Year. She has LLB degree from Government Law College, Mumbai, and it's wonderful to see Ms. Joshi again. Also with us is Dr. Nitin Kumar, and Dr. Nitin Kumar is Senior General Manager Projects at Power Finance Corporation, now known as PFC, and he's got about 2.5 decades of experience in Indian power sector. And he spent time in corporate planning before he joined projects, and where he currently oversees project financing. And he's also the unit head for central sector projects as well. And in the past, he's also worked at NTPC. He's an electrical engineer by training, also has a degree in thermal power plant engineering and an MBA and PhD as well in financial policy. So welcome, Dr. Kumar. Wonderful to have you with us. And finally, we have with us Mr. Robert Sexton, W. Sexton, who is Director, Office of Energy at United States International Development Finance Corporation. He originates structures and closes senior debt and guarantees and transactions in the international energy sector. Has been part of DFC's Office of Energy and the predecessor DFC Energy teams for over 14 years. I think that when he says predecessor, he probably means OPIC, I'm assuming. And he was earlier Senior Investment Manager at the US Department of Energy's Loan Guarantee Program as well, and has previously worked with Prudential Finance, Chemical Bank, Newcoat Capital, and CIT Corporation. So we have a good panel here representing different perspectives, and with your permission, I will come and join you guys here. So I think we plan to make this a very freewheeling exercise. So not long answers, short answers, not long remarks either. That will allow us to, maybe you can pull this side a little bit, perhaps. I don't need a separate little thing. Okay, yeah. So that will allow us for more questions to be addressed, and I'll make sure that everybody sort of has a first shot at it, although I have different questions for you, because you all represent different perspectives. Let me begin with Mr. Bibhu. Mr. Bibhu, just because I'm seeing you as a person who's going to give us an overview of the market, right? I'm seeing Dr. Kumar as well as Mr. Sexton as people who I'm going to ask them specifically about what they are doing in terms of the sector and what they're financing, what they're not financing, et cetera, et cetera. And then I'm going to look at Ms. Joshi to tell us about the issues that are coming up in these financing agreements, and are they deal breakers, not deal breakers, those kinds of things. Okay. So Mr. Bibhu, if you can just tell me, in general, I know that over the last few years, green finance or finance of solar projects has been sort of a favorite of the financiers, right? More willing to finance this. I mean, there was a time they weren't willing to touch anything a few years ago other than solar or transmission. They weren't looking at conventional power or roads or those kinds of things. I know things have changed in the last couple of years, but right now, are they still looking as favorably at this, the financiers, or are they not? Yeah. I just get my phone.
Hello.
There. Yeah, go ahead.
So just to give a perspective of how the things have evolved, the first project that I tried to arrange financing for in solar sphere It was a megawatt capacity somewhere in eastern part of the country. And we struggled a lot to, arrange financing. No banker, no financier was, willing to touch that project. They had so many concerns as they have for any, new emerging sector. So that was a scenario. But with the passage of time, things started getting, concretized. The policy started becoming more and more, firm. And the technology also started becoming stable. Lenders started looking at those proposals. With the push of policy and the intent that the government has shown and the volumes that we are seeing, now it is almost like a kind of, a very usual kind of thing for a bank or a financing institution. In fact, this is one of the most preferred items as far as.
So that is still the case, even this year. I mean, now that there are more financings that have happened, that's still the case.
That is still the case. That depends on certain policy related challenges are still there.
Right.
But among the sectors that which lenders are looking at, this is one of the most.
So are there projects that are not able to find financing?
There are very few. I don't recall any project which has failed to find any
Really? So pretty much everyone has
project, especially if you talk about solar or wind kind of.
And I know this varies, but what is the cost of capital? Is it slightly lower than other infrastructure sectors, or similar, or
very competitive? Very competitive.
But would it be lower than for a roads project, for example?
That depends on kind of.
I understand it depends, but in general, can you make that comment?
Generally, what we are seeing that because the money that you are going to realize is essentially from a counterparty.
Right, I understand.
Most of the cases are
are stronger players now than they used to be.
So the rating that the rates that they are getting is on the lower side as compared to roads.
So this was about project finance. What about needs of manufacturers? How are you? Are you involved with that, or do you have a visibility to that?
We are looking at some of the proposals which have come up.
Yeah. But companies like Vikram and Innovari and all of these people.
Yes, there are challenges, and mostly since initially the challenges are related to their viability, commercial viability per se, because it is thought or it is believed that initially probably some kind of policy support, even financial support will be needed in form of VGF or PLI. To make them viable, at least for initial few years. So what we are seeing is intent from the government side and policy initiatives also to support whatever manufacturing related initiatives are there. In addition to that, there are policies to for example related to domestic content requirements, etc., which is likely to make them more and more preferred and viable in future.
Okay, and what is the banker perspective on, we have this issue in India where the manufacturers would like more duty, would like more protection, that'll push up the tariffs. The developers were saying, no, let us use the Chinese guys for a bit longer or for more. So what has been the banker, because you guys have a seat on the table as well, right? So what has been your opinion when you're asked to share it by MNRE or others?
See, this is not something which is specific to this sector. It is a story with almost all the sectors where we have competing interest groups.
Right.
But at the end of the day, we have national interest, and we have particularly the bankers or the lenders. They have the interest of their depositors.
Right.
In the long term, we definitely believe that having more domestic manufacturing will probably provide us more comfort, because we also will be more comfortable knowing the fact that the equipment or the
is from India itself.
Coming from India itself. That reduces the challenges or the risks related to supply of those equipments.
Right.
So that is there. But for initial years, there will be certain hiccups, and where we were expecting that policy support is crucial. We are seeing essential policy support in that direction, both in terms of certain protective measures as well as.
But I guess what I was asking was, net, what was the opinion of the bankers? What did you say to MNRE? Let these guys import for a few more years, or did you?
it's more of a issue of balancing. It should not be like that.
Okay. Yeah.
One
So both
restriction should
aspects,
be,
both.
moving ahead of another, sector. So if you have capacity, sufficient capacity, then probably you can go for it.
Okay. So different question about cost of capital. As you said, it's competitive. So is the cost of capital today lower versus 2 or 3 years ago?
It has risen, and it has.
Okay, so it's risen, yeah,
Yes,
okay.
it has definitely risen.
So then I'm assuming there is a spread between whatever you take as a benchmark.
Yes.
Has the spread also increased or the spread remained the
Not
same?
per se, because once the benchmark starts moving up,
Yeah.
there is more and more pressure to
To keep the spread down.
keep the spread down, so
Okay.
as to keep the overall rate in check.
Okay.
However, there is a limit beyond which the lenders cannot go.
Right,
So
right.
that is the situation.
Okay. And final question to you, not final, but another question to you before I move on to Dr. Kumar. In terms of the types of lenders who are there, or types of, any new sources of capital that you're seeing, not equity, but debt?
There are new institutions, but, not that new, but fairly, new compared to other lenders.
Right.
For example, certain institutions have come up.
Right, ASEAN and things.
Yes,
Mhm.
those kind
Okay.
of things are there, and especially if we talk about renewable. And then we have, institutions like powerhouses like, PFC and REC, who have always been the driving force behind the sector. So new institutions are also coming up. Even
Right.
the foreign banks have also started, taking,
Great
doing the
interest in
things
that. Okay.
positively.
All right.
So
Let's go to Dr. Kumar now. Dr. Kumar, we of course know PFC. I think been interacting with them for almost 27, 28 years.
Great.
Mr. Kohli was the chairman then when we started
Great.
interacting with him. So give us a sense as to how long you've been looking at renewable solar financing. Also give us a sense of your magnitude and the scale of your lending right now to the sector, in terms of megawatt of projects or in terms of money that you are dispersing or the
Yes.
money that you are sanctioning, and also where you are and where you intend to be.
Yes. Let me give you the brief about the Indian solar power generation sector presently. We all know 500 gigawatt has to come from the solar power, and so from the non-fossil fuel, and 300 gigawatt will be coming from the solar power generation. So presently we are 82 gigawatt in the solar sector, and there is a huge potential available. Around 220 gigawatt has to come from the solar power generation. As far as PFC is concerned, PFC started its journey in year 2011-12, funding solar projects. Very small solar projects were coming to PFC. I remember in year 2011, we sanctioned only 186 crore and disbursed only 26 crores. So that was the situation at that point of time. And in the last financial year, the total sanction is around 99,000 crore, and we have disbursed 62,000 crore. You can see the growth in this particular sector.
Okay. And right now, when you're looking at projects, do you have certain criteria in terms of minimum size of the project or the type of project developer?
Yes.
I mean, assuming, for example, the public sector developers are, of course,
Yes,
the
yes.
ones you're definitely going to
Yes,
go with.
we have minimum size cutoff. Below 10 megawatt, we are not doing that.
You're not looking at that.
Yes.
And do you have a upper end in mind?
No limit on the upper
Okay.
side.
So I know you mentioned in terms of
We have, great exposure limit. We
Right.
can fund up to any extent.
Okay. And you mentioned aggregate numbers that you've done. Could you give us a sense of last 12 months, some of the projects that you're financing in solar space?
Yeah, in the finance, we have financed Adani projects and ACME projects we have done. Recently, this bidding was done by SECI based on that concept around the clock, along with the energy storage system, in which the bidding tariff was discovered 4.73. So that we are doing, in which I think they are giving the peak power during the morning hours and in the evening hours. So it's a
Right.
unique kind of project.
Right.
It's a recent development in
Right.
this area.
Right.
So
Right.
that project we are funding.
Okay. And now the projects have become a bit more complex over the last, few years, right? I mean,
Yeah.
you're talking about different components. It's not a straight, simple thing.
Yeah,
Uh,
it is
and so
becoming.
how are you look? And so let me at PFC, you have exposure to lots of sources of power, right? So when you look at a 4 rupee power, how does PFC look at it? 4 rupee 50 paisa versus cheaper solar, but also versus more expensive coal. So how do you look at that?
No. We have to maintain a balance in the solar industry and in the
Overall power.
overall power sector.
Okay.
So it's not like that. Obviously, the coal power is bit costly as compared to the solar power, but the balance is very much required.
Okay. Now, do you do most of the financings for solar that you do you do them on your own, or do you do them as part of consortium? Are you the leading, underwriter or arranger, or do you join the banks?
No. In the most of the cases, we are the sole lender. We are not going the consortium. In some cases, if we feel that we have to form a consortium, in that case, we form. Otherwise, we are not.
Okay. And how are you different from, let's say, REC? Is it pretty much the same? As far as lending is concerned, is there something more you're offering to solar developers? Are you able to do bigger financing or give them a better rate? Or so versus REC, or do you feel you will work hand in hand with them?
As far as REC and PFC is concerned, the operation more or less is same. I mean, there is no difference as such in terms of lending rates, in terms of financing, in terms of policy. Almost we have same policies. The only thing is, we are capturing the volume together.
Okay, all right. Any in terms of next few years, what are the numbers you're looking at, perhaps from PFC point of view?
Yeah, it should be double. It should be
Should
double.
be?
But where
Should be double.
It should be double.
Should be double what you're doing.
Yes.
Okay, all right. Let me. I'm going to come back to you, of course, but let me go to Mr. Sexton. Mr. Sexton, as I said, I mean, we are more familiar with OPIC, and OPIC was, with I think in financing of Enron deal, etc. So they were quite well known at the time. Not as familiar now with what you guys are doing now. Could you tell us, why you are here, right? What is your interest in the Indian market? What are the financing that you're already doing? And then we'll take it from there based on your answers.
Sure. Good afternoon. The U.S. International Development Finance Corporation, whom I am with now, the predecessor organization was called, as you mentioned, OPIC, which was Overseas Private Investment Corporation. About 5 years ago, and OPIC has been in the development finance activities since about 1971. However, about 5 years ago, the U.S. government really wanted to increase the size of the U.S. government. We're a U.S. government agency, and the U.S. government, through sort of bilateral support from both parts of our political parties, really supports development finance and wanted to increase the size of OPIC. So we formed 5 years ago through legislation, which was called the BUILD Act in the U.S. We formed what's called DFC, which is the United States International Finance Development Corporation. That was increased by having a larger budget, by the ability to have a larger ceiling for the amount of money we can lend worldwide in developing countries, and also by combining us with other parts of other government agencies that had lending aspects to those agencies. So they combined us into a larger agency. So we went from roughly having a ceiling, the ability to lend senior debt and equity of about $30 billion. Our new ceiling created 5 years ago was $60 billion. Now that we're hoping that is actually going to be increased we're going through a rechartering for the next 5 years, and we're hoping that's going to be increased significantly above $60 billion. So that is what the agency is. We operate in developing countries around the world, roughly about 125 or so countries. India is one of our major markets. We've been, India, in our portfolio right now that has about 40 billion outstanding, India represents approximately 10% of that, or about close to $4 billion. Now that is across sectors, it's not just in energy, because we are active in markets such as infrastructure, healthcare, SME lending, and lending to businesses where women have a major role in terms of entrepreneurial businesses. So, but in the energy sector, we have been very active since approximately 2011-12 in India. We financed, I believe, one of the first utility-scale solar projects for Azure Power back in about 2000, I think it was around 2012-13. There was a 5-megawatt project and a 15-megawatt project, both solar. So we financed those. But since then, we've gone to much larger projects in utility-scale generation. We're usually a sole lender, although we like to work in the sandbox with other lenders, whether they be Indian lenders or other DFIs or development finance institutions like Asian Development Bank, IFC. But we've gone up to much larger numbers to finance in a single project, $200, $300 million in a project of long-term senior debt. We have also, and we have the capability to go to $1 billion US in one single project. I think the largest we've done worldwide so far is about $750 million in one project. We've also become very active in the solar manufacturing sector in India. And over the last few years, we've financed the first solar project, which was $500 million, which is how much of senior debt we provided to that particular, the building of that plant. And we've also, more recently, financed about $450 million for Tata, for their solar manufacturing facility. And we're currently discussing with other solar manufacturers in India about providing senior debt.
Okay. What is your interest in financing manufacturing in India? Is it because you think that eventually they will export to US, or is it because you think there will be some components they will import from US? I mean, what would be your interest in financing that?
It's partly, there's the geopolitical aspects to it.
Oh, okay, right.
Where we're looking for countries to have diversified ways so that certain countries don't have.
So making sure the supply chain is more diversified.
I'm sorry?
For the global market, the supply chain is more diversified.
Yes, so to have more diversity for both the worldwide and within certain countries like India, so that India becomes more independent yourselves in terms of solar manufacturing. So we're looking to promote that worldwide, and into the U.S. market. That's a market that's actually developing in the U.S. right now through our recent tax legislation. So it's an interesting combination, and there some of the geopolitics come into play too. But overall, it's a diversification worldwide effort.
Okay. And in terms of the financing of the projects themselves, going forward, what is your sense in terms of what you might be looking at in terms of project finance in India?
In India, it's going to be more solar wind projects, and then it'll be more of the hybrids and the combination projects, the round-the-clock projects, solar manufacturing. We're also, we tend to try to get involved as a development agency more in the front end to bring in more private capital, and work with private capital. And once the industry can take off with private capital, we can exit to another area.
Right.
So entering into areas like clean equipment manufacturing, green hydrogen and green ammonia is another area that we're looking at very closely right now. Transmission. Where we might be able to get involved with transmission systems or with equipment, related equipment.
Okay. And do you have a criteria in terms of minimum size?
Minimum size, I would say, is in the energy sector, probably somewhere we go at more like dollar size than megawatt. I would say more 15, 20 million would be the minimum.
Right.
I mentioned the larger size we can go to, but I would say a sweet spot is somewhere in the 250 million range. Okay. For a project.
And as you said, one of your concerns is, obviously you're trying to address the geopolitical concerns. So in addition to India, from the point of view of making sure the supply chain is diversified, which are the other countries that you're involved with? I'm assuming Vietnam would be one of them, but which other countries you're involved with?
Well, it's many countries. And but they all have to qualify. We're not open in every country in the world because we're not open in I say open, meaning that we're a development finance agency. So we don't do business in countries that are upper middle income or upper income countries, like Western Europe, for example, or someplace like Canada. They don't need our financing. But we're active in parts of Eastern Europe, in Turkey, throughout Africa, and also in parts of Asia, including India, including India as well.
Okay. Now, some of the manufacturing units that you're looking at or have looked at in the past are doing some exports to US. Is that a consideration when you're looking at these projects?
It is a consideration because we have our policy teams are very focused on whether or not a import to the U.S. might impact jobs in the U.S.
Right.
So we have to focus on that and see what that impact might be.
Okay. So if they're replacing other sources, it's okay, I guess. But if they're replacing U.S. sources, then probably not.
That unless there's some type of a way that those two things sort of match together. But if it's a direct competition and it's going to create a loss of jobs, that can be a major problem for us.
In U.S. itself right now, how much is U.S. dependent on supplies from China?
A very timely question. I mean, like most parts of the world, we had been historically very reliant on the modules coming from China. The developers in the United States have a similar perspective as I think the developers in India have,
right?
In terms of their meeting their IRRs and cost parameters. But there's a lot of dynamics that are going towards changing that right now. So that's also a very geopolitical question, and there's a lot of sort of protectionism and things going on worldwide, and the same thing's happening in the United States.
So you know, as you said, there is tension between the developers and the manufacturers. Because the developers would like to be able to import so they can have lower tariffs. Manufacturers, of course, feel that, you know, as we heard yesterday, you know, China is subsidizing, ready to operate at losses, and therefore the manufacturers don't feel as competitive or feel that's anti-competitive. So where does the U.S. government net out on that in trying to balance the interests of two?
We have a similar conflict as in India, where there's sort of near-term solutions, but longer-term solutions. I mean, we're building out a major solar manufacturing industry in the United States. However, we can't build out every component of that right now. I mean, we've got module plants being built. We have some cell plants being built. But when it comes to the basic material, polysilicon, you know, we still have that issue in terms of getting that supply. But we are promoting the ability in certain other countries to build solar, as in India, solar module, or in some other countries, solar cells, where they can then supply our solar module plants in the United States, because we don't have a lot of solar cell plants right now.
Okay. Ms. Joshi, you've been listening very patiently. And now if I can come to you. First of all, if you can just tell us, typically from your point of view, what are the, and now I'm talking about financing of the projects themselves. What are the issues that are sort of, let's say, obstacles from a policy and regulatory standpoint? You know, what are the main concerns from a policy and regulatory standpoint that you think makes financiers hesitate? Although I understand in the final analysis they decide to lend anyways.
Right.
Yeah.
So from the policy issue, I think it's pretty much about the fact that there is no consistency and there are constant changes in the policies, you know, for transmission, etc. So those things really become an issue. Development risks really become financing risks. So anything that affects development, those kind of issues also come up. One thing that I've heard about from developers is, and you know, off-takers, is the fact that you know, they are worried about curtailment of solar power or renewable energy. And you know, that really looks at consistency of power which is being generated, and that also then becomes the thing that financiers have been looking at as well. So those are pretty much what I would say are the primary risks that have been coming up.
Off-take agreements, there have been issues in the past. Are they mostly behind us now? Or, you know, I'm talking about Gujarat issue, Andhra Pradesh issue,
Yeah.
Have they pretty much been resolved, and or is that still a concern for financiers?
That is still a concern because, I mean, it's not been laid to rest everywhere. So there are still, issues in Andhra Pradesh where, they are looking at renegotiating contracts. A few years ago, I heard about the Punjab government coming out with the bill, which would, basically have statutory recognition to the ability to renegotiate contracts. I don't know where that went. So the intention, at least, is for the governments to have that kind of flexibility to renegotiate those numbers. So
Okay.
it becomes, I mean, at least
So
lends to insecure.
who else, I mean, besides Punjab, who else has looked at it in the last 12 months?
In last 12 months, I think it was Andhra Pradesh that I'm most.
Yeah, but Andhra Pradesh was longer and then it's
Yeah,
gotten
correct.
resolved more
Yeah,
or
but
less.
those things, issues are still going on.
Okay, so renegotiation is not an issue.
Yeah.
What about the just nature of the agreement, offtake agreement between the DISCOM and the generator, and now of course there's a tripartite agreement as well.
Right.
And have the DISCOMs have they stuck to their promises?
I mean, of course, in the COVID era, there was this whole issue about payments, etc. That
Yeah,
came up.
I'm saying last 12 months.
Last 12 months, I believe that they've been, better at making payments, etc., because of the late payment surcharge regulations that have come up. There are securities that are now being offered, and especially when you're looking at, not, let's say, state projects, but at least SECI, etc. So there's more sort of trust on those kind of projects.
Okay.
Yeah.
But now there are still a number of projects for the MOUs were done that haven't gone anywhere.
Yeah.
Do you see those reviving, or do you see that they will just fall by the wayside?
I think they would not revive. I think there will be new projects and new MOUs because, there were reasons why they didn't really, go ahead. So I
Right.
don't believe those issues have been resolved and new MOUs would be signed.
Okay.
Yeah.
And now, in wind, we are seeing the reverse auction is not happening now. Some of the people are saying they're looking for the same in solar.
Okay.
And what's your perspective on, is that likely to be the case or not likely to be the case?
I've actually not heard about this. So.
Sorry?
I haven't really heard about
You,
this.
you've not really
Yeah,
looked at
yeah.
it. Now, what is the latest on the GIB situation, the Great Indian Bustard?
The Great Indian Buster situation,
You're not aware of that?
No, I'm aware of the case, but I don't think it is now something that we need to take care of when we're looking at
You
it.
don't think it's an issue anymore?
In the sense that, of course, when you're doing your due diligence, etc., you need to figure out the habitat, etc., to see if there could be, because the Great Indian Bustard was for a specific area.
Right.
Now, the issue is that if I'm looking at another area, I need to look at the ecology of that place before making that decision.
Right.
Yeah.
So when you look at the various project finance agreements, what are the deal breakers today? Is the deal breaker track record of the promoter, or is it deal? Are there any deal breakers, or are people so enthusiastic about green project financing that they just say yes?
I wouldn't say they just say yes, but I do believe there's a lot of enthusiasm and a lot of lending and investing that is going on. The same factors that they would consider as project risks is something they would consider while deciding whether to finance a project or not, but at the end of the day, they decide to go ahead and take the risks.
Okay, right. If you were to suggest a few steps to the government from a policy and regulation standpoint, what would you suggest? The issues that are still not resolved, things that you feel need to be resolved.
The policy issues basically are around, the way that tendering is done, whether land is given or not. Land is a big issue.
Mm-hmm.
So, earlier you had tenders where more land was given and, there is more certainty. And the government does have land, so whether that could be made available and the policies in place for that. Issues around, connectivity, open access and transmission, those kind of things would also lend quite a hand to making the financiers and developers more secure. So those two kind of issues that I believe need to be resolved to give greater certainty.
Okay. Now, in the agreements, whether they are tripartite or let's say SECI agreements, is the connectivity issue taken care of? Are they assured access, and what happens if the access doesn't get built in time?
So there is no certainty. It always is the risk that is basically given to the developer. And there may be some state support, but at the same time, that risk will still remain with the developer.
Okay. But curtailment, what happens if there's more curtailment than expected?
That is what people are saying, that if there's renewable energy, there is more likelihood of curtailment because of the fact that, the the rates of the tariff may be different, and Discom may be sort of incentivized to curtail power and just actually deliver their own power. So that is something that is being said, which is why the government had come out with the norms that there can be very specific reasons for curtailment. But then again, the reality is that there still are curtailment on various reasons which are not sometimes given as well. So.
Okay, all right. Let me now go to Dr. Kumar. Dr. Kumar, the question I asked Ms. Joshi as to what does she see as deal breakers happening. Of course, you are lenders. What are the kinds of projects that you've decided you will be hesitant to lend? I mean, what are the projects that you don't want to lend to?
Especially for those projects who don't have the PPA in place,
Okay.
that project will be hesitating to lend. And in terms of land, if the land availability is near, because land availability is a big issue. And sometime on the looking at the strength of EPC contract sometimes. So these are the major area, will be.
Okay, so now SECI projects, you're comfortable lending fully?
Yes. All the government projects.
You're fully.
comfortable.
And the state projects?
State? Yes. We don't have any issue in spending the state
All right.
sector. Our major portfolio, 82% is approximately the state sector.
Okay. Are you, and do you feel comfortable right now with the tripartite agreement that is there?
Yes, we don't have any issue.
And you've seen that discoms have been paying?
Yes, regularly.
There is no issue.
As far as no default in the book of PFC.
Okay. And are you also looking at CNI projects financing or?
As of now,
No. Would PFC have any role in the rooftop or Kusum or one of the other
no,
projects?
REC is taking up this.
REC is taking. The PFC
No,
will not be
no,
taking.
no.
And what's the capability that you have at PFC for looking at renewable financing? How many people do you have, and is that expanding?
We have a team of around 10 to 15 people are there. Who is especially dedicated unit is there for funding this solar and wind project in the PFC.
Yeah, Mr. Bibhu, CNI financing, is it also, do people prefer CNI projects to utility projects or not?
If it comes to preference, it definitely is in the favor of utility projects. But if C&I projects become a reality, for example, if it is with really very good kind of developers with solid rating and execution capabilities, lenders are willing to look at those. So there is
They're willing, but they're not over enthusiastic. Is that what I'm hearing?
Yes, because
Okay.
see, they have accumulated expertise and comfort as far as utility projects.
So where do they get the money from? I'm talking about the Ampluses and the Sunshores and SunSource and those people.
I'm not saying that they won't be getting money.
What I mean is that will the cost of capital be higher for them or?
It could be, and there could be more, hurdles that they will need to cross before, actually accessing the funding. So those kind of challenges will be there, and probably more checks and more rigorous evaluation process will be there. But if it is found to be feasible, and of course, no one will, touch a project which is not viable or feasible, but it has to pass through a more rigorous process of analysis, and probably the time taken will be on longer side, and the rates that they will probably get will also be on the higher side.
Okay. Mr. Sexton, if I can come back to you, what are the terms of financing on your projects in terms of structure, in terms of rates, in terms of tenor?
Sure. We fund, first of all, we can fund very long. So if, for example, if it's a 25-year PPA, we can do up to 23 years of long-term financing. We generally do fixed rate financing that is priced over a weighted average U.S. Treasuries with a spread above that. So that is the general structure. We can do floating rate. We fund in U.S. dollars, so when we don't have the ability currently to fund in local currency in India. However, we're hoping that will change in the future. But then we have to work with the developers in putting together currency swaps. And we generally, the market for currency swaps is generally 3 to 5 years. So we work with a program of rolling currency swaps so that we can do the long-term financing, and then every 3 to 5 years have that swap roll over. And we're comfortable doing that.
Okay.
And that's the general answer. Was another aspect of that?
No, that's fine. And in terms of the foreign exchange risk, etc., how do you address that?
Well, we've done a lot of analysis on the between the U.S. and the INR historically. We have to do a lot of historical analysis and see how that's played out,
Right.
and then do a lot of sensitivities, talk to various currency experts, and try to figure out some level of deviation risk that we can be comfortable with.
Okay.
I mean, you're not going to be 100% protected.
Right,
It's just
of
not
course,
this.
right. And are you looking at have any proposals come to you which are 100% export, but manufacturing in India?
100% export. Not as of this moment. It's generally been a mix.
Right.
Although some of them have been more geared towards, we heard yesterday a speaker from First Solar.
Right.
I think most of their market is geared towards India.
Okay.
So
Okay.
it can be a mix, or it can be all
Okay.
in India.
Yeah, Ms. Joshi, do you have any visibility to CNI project financing, or do you work primarily on utility scale projects?
More in the utility sector, not so much in the CNI sector.
Not so much on CNI.
Yeah.
Okay. What have been some of the new or innovative features in financing arrangements in the last few years?
I don't think there's anything innovative per se. I'm just looking at another aspect of it, which I think was touched upon in the
Could you
previous.
bring the mic to you?
Yeah, the previous one for CNI funding is through the VPPAs, right? So that is something that is being looked at separately. But at the same time, the regulatory sort of landscape on that is not very clear. But I see a lot of clients that are looking at VPPAs as a source of financing, but they just don't have, clarity on the structure on that. So, which is something that probably in the next couple of years may pick up quite a bit from the perspective of a more traditional VPPA and not what people are doing today in the market.
Okay. Yeah. Mr. Bibhu, you want to?
Recently, we have done something. Last year, we arranged a standby line of credit for one of the public sector renewable companies. So it is a lump sum line, which is not tied to any specific project, and it is of short-term nature, medium-term rather, 3 to 4 years. So it is available for the company to use it in any project that they are developing. So they can, just use that line to declare their financial closure, construct the project. And then after construction is over, they can replace it with a long-term financing, which in any case, most of the developers are doing.
Okay.
So this is a kind of bridge finance facility which will be available for them. So this is something which has been done for the first time.
Dr. Kumar, is there a thumb rule that we can use that if we're going to need 300 more gigawatt, this is how much money we'll need, either in terms of rupees or dollars?
Yes.
I understand there are different kinds of projects. I understand, projects involving energy storage, projects involving round the clock, et cetera, et cetera.
No, as such, we don't have any thumb rule, but it depends. I mean, costs keep on varying.
Right.
So that's
Okay.
why we cannot.
But it's
make
not
any
like
thumb
$1 million per megawatt that used to be a rule once upon a time.
No, not
Okay.
at all. It depends from project to project.
Okay.
Case to case
And
basis.
Mr. Bibhu, as the projects get more complex in some ways, right? Because they've got a peaking component or they have a, storage component. I mean, eventually, I think in some ways we're just driving towards around the clock, sort of arrangements one way or the other. So therefore, are you seeing, what kind of storage components are you seeing in these? Is it battery, is it pump storage, or is it?
The push, the policy push seems to be more towards, battery storage. But globally, I believe pump storage is more of a, rule rather than, exception.
Right.
And of course, I'm not a technical person, but probably those engineers who are here will be able to shed more light on that.
Okay.
as a, a component, probably pump storage is easier to ramp up, easier to scale up, and it is a more stable and proven technology which is there. So if we have to, incorporate that as a part of our energy mix, so probably that will be.
Okay. Yes.
take-
Dr. Kumar,
that
you wanted
will,
to say something?
be
Just
taking
wanted
the
to add to what Vibhu is saying, that obviously the future is only pump storage.
Right.
Future is pump storage, and it is more stable and
Cheaper.
cheaper.
Okay. Yes. All right. And
But that
fewer
it's
issues
very-
from hydro development. Yeah.
Yes, but it's
Okay.
very capital
Intensive, right, yeah.
and the thing is, I mean, it will take gestation period is very high.
Very, very long.
That's
Okay.
the issue.
All right. Okay.
Just to add to what Nitin sir has said, one of the pump storage projects that we were involved with, so it has already taken 10 years, and
Right.
it is yet to be, commissioned. So that is there. So,
Right.
and at times, even with finances also, it
Right.
gets classified or clubbed with hydro.
Right.
And hydro had its own share of challenges,
Issues,
and
yeah.
there is a perception for
Right.
hydro.
But a pump storage, which is being looked at more as storage, in some ways would be more appealing
Yes.
than a pump storage which was just looking at it purely as hydro power generation, right? I mean, the project you're referring to, no one was thinking storage at that time,
Yes.
right? No one was thinking of that as a balance, providing the balance in the grid, right? It was merely a question of, yeah.
The future is energy storage system and this pump
Pump storage,
storage.
Okay.
That's-
We'll take some questions from the audience now. And I guess what you have to do is to stand up and so that cameraman can find you and ask your question. Any question here on my right here? Yes, please. Could you please stand up, please? And the mic will hopefully come to you.
Hi, very good afternoon. I'm Kaina. My question is to Mr.
Could you
Sexton.
bring the mic closer to you? For some
Yeah.
reason, the volume is
Yeah,
not so high today.
Yeah, it is not high. So my question is to Mr. Sexton. I understand that you do finance OEM manufacturing facilities in India, but I happen to work with few manufacturers who are trying to set up manufacturing facilities in the US under Inflation Reduction Act, as you have mentioned about it as well. So what is the take of DFC? Like, do you support Indian entities for setting up facilities here? And also you do provide financing hand to those manufacturers in the US under this act.
Right.
So is the question is if we're supporting manufacturers in
Yeah,
India
in India as well as US.
and back in the US.
Yeah,
See, we're, as a development finance agency, we do not do any financing in the United States. So we're strictly international in the countries that we are open for.
So if Vikram wants to set up a unit in US, you would not finance that?
No, we couldn't finance that. There would be, you'd go to US banks. There are, for example, right now in the United States, there's a tax, we call it the IRA, which is the Inflationary Reduction Act.
Yeah.
And there are a lot of foreign companies or international companies that are coming to the US to take advantage of those tax benefits. But there are many banks, private banks in the United States and tax equity entities that are involved in that. Even the Department of Energy has a loan guarantee program. Now that is a sister agency to us. They
Okay.
have a lending program that is looking to promote only within the United States. So that's a possibility to talk to the loan guarantee program of the Department of Energy.
So the answer is really no to you.
Probably,
But both for
most
both your
likely.
situations, yes.
Thank you.
Okay. Any other question on the right here? Yes, please, in the back. There's a raised hand. And could you stand up, sir? Then the cameraman can find you as well.
My question is to Dr. Nitin. I'm from PTC India Financial Services. Being a lender, new technologies are in place if I talk about renewable sector, and particularly in solar. Although industry has been matured, but there are new business models in place, new combination of projects are in place. So apart from promoters' reputation and private equity investment, what are the other comfort? What are the other areas to develop your comfort from to get a
Okay.
call on the same?
Okay, I think,
mitigate the risk.
Before I request him to answer the question, I'm not sure we are all in agreement with the premise that there are no business models. It's been there for a long time. But having said that, Dr. Kumar?
Yes, we have a business model of funding the project, although the new technologies are coming in a big way. And like I said, the combination of energy storage system along with the wind and solar project. So we are funding these kind of projects.
Okay, right. Sorry, you have a follow-up question? Yeah.
Sir, I'm talking about new business models with the clients which we are dealing with, and talking about all renewable sector, not only particularly about solar. So, yeah.
Can you be very specific?
For example, if I talk about EV, so new technologies are in place.
Okay, yes, we are funding EVs. We have dedicated a special unit form recently to fund the EV projects also, and we have funded a couple of projects in the EV sector also.
Yeah. I think PFC, you should know, is right now looking to fund all infrastructure. Dr.
Yes,
Kumar hasn't talked
yes,
about it, but they're looking to fund ports,
yes.
they're looking to fund roads, they're looking to
Yes.
fund all projects. Yeah.
So even
Last year we got the mandate to fund to go into the infrastructure segment, and we are coming in a big way in the infrastructure.
Even
we
if
are
there is
we
no
are doing the ports, we are doing the roads, and we are doing the ethanol production power plant. We are diversifying ourselves.
Yes, sir, I'm aware of
Okay,
the
thank
same.
you. Sir,
So
I think
from-
we'll stop
From
it here
where
with you.
you
Sir,
develop
sir,
the
I think-
comfort, actually,
yeah,
that
sir, I think- yeah,
was
sir,
my question.
Yeah. Sir, I think if you can take that offline, right after that'll be good. Any other question on the left side here, please? Any, no question? Okay. Which case we will, sorry, before I do that, is there anything that I haven't asked you about that you felt you wanted to say or you wanted to re-emphasize? Dr. Kumar?
No, I think you have covered everything as far as the financing in the solar power sector is concerned.
Okay. Yeah. So, Dr. Sexton.
I would just add that there was a reference to infrastructure. We also have a separate group that does infrastructure, airports and things, and
Right.
toll roads in India. And we also have a team within our energy group that focuses on e-mobility that has been very active in India.
In India as well. Okay. Ms. Joshi? Nothing? You cover. Oh, okay. But not just speak about it. Is there anything else you wanted to say? No? Okay. You have the last word, Mr. Bibhu.
As far as financing of renewable sector is concerned, we see huge opportunity which is there. You are talking about the volume which is possible to reach the desired level that we have planned. So probably it could be in the range of 10 lakh crore or 20 lakh crore, that kind of volumes we are talking about, and that will be over next 10 years period. So as far as finances is concerned, this is something we will have to focus on, and this will be our
A big opportunity for you. Big opportunity
area.
for you. Okay, great. So on that note, we'll end this session. A lot of insight in the session, and we owe gratitude to Ms. Joshi, Mr. Sexton, Dr. Kumar, and to Mr. Bibhu. So the four panel.